I'm Charlotte McLeod with investingnews.com, and here today with me is Joe Mazumdar, editor at Exploration Insights. Thank you so much for joining me. Great to see you.
Great. Thank you for inviting me again.
Of course.
PDAC.
Yeah, we're catching up from our PDAC conversation. I guess that's more than 3 months, more like 4 months ago at this point.
Yes, it seems like that.
Time goes very quickly. When we were speaking there, I asked you about sentiment in the junior space, and you said it was a risk-off environment. Funding was drying up. Now we're entering the summer months, which typically are slower. So what are you seeing at the moment?
Well, if you look at just the financings, if that's a good proxy for what's happening in the industry, if you look at the TSX Venture in terms of IPOs that raised money, up to the end of May, I think it was only 8 million, less than 8 million, which was almost a 90% drop from the previous year, comparing, the year to May. And also total financings, whether they're IPOs, secondary financings, and that are down 35%. So that's a good gauge of sentiment, which is not positive. So, so that continues, and it's even slower now given the summer. But, we're going into the field seasons, and people are unable to do a lot of things that they want, whether it's lack of funding. And then I think we were going to broach the subject about forest fires in Quebec, where I was about a month ago. Even the companies that have raised money can't do anything because of the fires.
Yeah, that was a topic that I wanted to touch on, and interesting that you were kind of there in the middle, well, hopefully not too much in the middle of it. No, but yeah, I wanted to ask you about the wildfires. And so this is something that is happening every year. It seems to be happening earlier and earlier, at least in Canada, more intensely. So how is that impacting the industry? What could we see in the future?
Well, here we do have, the temperatures going up and that, but also we have exacerbating that is the El Nino weather pattern that's also making it worse than it normally is. But we've had these things. I remember like several years ago, I was up in Red Lake. We had forest fires up there, which shut down that mine and shut down exploration for a while. But this is more of a regional thing that's infecting almost all exploration of the James Bay region and out to the east. So a company like that was at the conference, and they like to say, hey, we're going to be drilling tomorrow. Hey, the rigs are up there. They would make that announcement. Then 3 days later, they say, well, we can't even get to camp. And so we're not expecting any news flow or these people to get to camp until August. So hopefully they're going to be able to push the field season out till October. But and then even Agnico has basically had to suspend or slow down their operations right now. So it is impacting production all the way to exploration in Quebec.
Any thoughts on possible long-term effects on the industry? Because summer is typically the time when people are out working.
Yes, I mean, there's got to be a little bit more thought about how they deal with that. But unless you're a camp that's well established, it's hard to work too far into the winter because you just can't. And then we also have the issues with some places where, we have the shoulder seasons. If the ground isn't frozen, there's no way of accessing it because of peat bogs and water and things like that. So, yeah, I won't say that this is like going to be an annual impact, but definitely this year has been worse than most.
Yeah, definitely very tricky to predict and getting harder with all the different weather events. So you mentioned you're at that conference in Quebec. I know you're traveling all the time. You have places you've been, places you're planning to go, any site visits or things you mentioned?
So we were talking about financing and sentiment, which is negative. And so, a lot of the financings for the juniors that have projects and people working in jurisdictions that companies would like are getting funded by industry. And so one site visit I was on in Nevada was to a company, we call them a grassroots explorer, but also a prospect generator. So the majority of their portfolio is funded by a major, but they have raised some bit of capital to drill their own projects. But the news flow is they're drilling and they're actively working on their projects, and they're well funded. But they couldn't get all that money from the capital markets. They had to go to industry, and that's what we're seeing now is more industry involvement. There's always been involvement, but now it's more essential.
Yeah, well, good to see some companies at least, finding those different solutions. And, we're here today at the Rose Symposium. I want to touch on what you presented on today. So you're looking at the geology of lithium deposits, so quite a technical topic there. If we could just touch on that, and if you could give some brief takeaways on what you think investors should know, because this is a complex.
Yeah, so when I was in Quebec, we were talking about negative sentiment. Positive sentiment was for those lithium plays, the hard rock lithium plays. And so, if you want to talk about two definite sources of lithium, one is the spodumene-bearing lithium pegmatite dikes that we've seen in Quebec. Most of the production comes from Australia, Western Australia, and now we're seeing more production from mines in Brazil. But the bigger reserves of lithium are from the brines, and the brines, the core area is the lithium triangle in South America, Chile, Argentina, and Bolivia, a bit in Peru, but mostly Chile and Argentina right now, and the Salar de Uyuni in Bolivia. And so what I was talking about in my talk was, what is the difference between the two? The salars, basically have, an ESG footprint is the water, because they basically pump out the lithium brines and then evaporate it to enrich it in lithium, and then process the lithium out, extract it, and form a lithium carbonate, which they can sell to the market. So to them, they almost sell a roughly end product. But because of the environmental impact, what they're introducing is a new form of extraction called direct lithium extraction, where they don't do the evaporation pond, and so they don't have that big of a footprint. They don't have to evaporate the water. They try using membranes and beads to basically filter out the lithium in a chloride complex and then produce lithium carbonate. The problem with that is that has yet to be put into commercial production, so it's still a big risk. It's a technology that's up and coming, but that's where we are there. But that could have a big impact on the lithium production sector if that works. The other one is the spodumene dikes. Mining-wise, it's basically very simple. You're looking into 1 to 1.5% lithium oxide. These dikes, the high strip ratio, but you only produce a concentrate. So you take 1 to 1.5%, make it 5.5 to 6%, but then you have to be processed. And that's the big risk for the US, Europe, and that is all that, especially from Australia, is getting processed in China. And so for the West is that they have to build up not only the mines, but they have to build up the processing capacity to compete with China. And so we should see some way of doing that, hopefully.
Okay, quick follow-up on DLE. So as you mentioned, this is a new technology. It's not really proven yet. And I know a lot of people shy away from companies that are trying to mine, and also, so would you stay away from that for now? Is that a future thing you would look at? How do you feel about that?
I think the risks with it, and they have basically been found out, like this Lake Resources that was developing their Cachi project, the brine in northwest Argentina, I believe it's Salta. They were going to do direct lithium extraction with Lilac Industries out of California. The first feasibility study, it put their production coming in much sooner than the second one. So there's almost like a 5 to 6 year gap now, and the capital has gone up 3 times. And, the capacity that they're thinking about going into, they're going to tier it. So they start at half that capacity, then get to full capacity in 6 to 7 years. But still, we haven't gone commercial on that. So I think in the end, this process will eventually take over the industry, but we may not be there yet. And there's also the oil and gas industry that's looking at lithium, and they have some brines that they have, basically extracted, and they're still sitting at surface. And so they have these brines, and now they're looking at what else can we do, and they're looking at direct lithium extraction. Those oil and gas companies can put a lot more money into the technology and probably come to a solution quicker. So I believe people are working on it, whether it's the Chinese, whether it's oil and gas in the industry. So I think eventually they'll come. We're probably not there.
Okay, really interesting. I didn't know that about the oil and gas companies, so pretty interesting.
And for them, that capital is not a lot of money for them. It's like but I mean, it might not ever make them a lot of money, but in the end, it might help them, lower the costs of what they do in oil and gas, like a byproduct,
Okay. And you know, the other thing about lithium, so we're talking about where does funding come from in the mining space right now. For lithium and other critical metals, there are a lot of government initiatives around the world that are looking at supporting those industries. However, there are a lot of conflicting definitions of what exactly is a critical mineral. So, any thoughts on that, and how do we need to see some alignment there?
Yeah, so I've done a couple of presentations on the problem, the path to this carbon neutral world, and part of it is the problem with the West versus the East, meaning China, U.S. and Europe, is that Europe has, I believe, 22 critical minerals that they consider critical, and they include copper. Like the U.S. has 50 critical minerals, and they do not include copper. Australia's got a different number, and Canada's got a different number. So everyone's working on how it impacts them mostly. And extractive, resource-rich countries like Australia and Canada may see it differently from the U.S. and Europe, which are, especially Europe, which is more resource poor. And so that's one part of it. And then, and there's a big difference between sort of saying, hey, we need more production of critical minerals, and then actually permitting it. And the other one is exploration funding. You just talked about sentiment. And so if there's no sentiment to fund exploration, we're not going to have a lot of projects. Retail does not like development. So who funds development? That's a lot of governments are coming in to help, and for companies like Ford and that are coming in to help, like with Thacker Pass and lithium. And then, development timelines, they can be 10 to 15 years. So how does this work in terms of getting that production in by your 2030 or 2040 timeline? That's, part of the problem.
Yeah, very tricky. And we've talked about before about the difficulties of permitting. I would recommend people go watch that PDAC interview, which I'll link to if they want to learn more about that. But as we're talking about critical metals and the definitions, and we're seeing some governments look to support that, one of the things that's happened since our previous conversation, if we've seen mining reforms in places like Mexico and Chile. So I wondered if we could talk about that and how you're seeing that shift the industry and the effects on companies there.
So Chile has introduced a new tax and royalty structure. And so I would watch to see how people reinvest in Chile. We have seen Lundin Mining buy the Caserones majority stake in that copper porphyry. But people got to understand that in Chile, if you make money in Chile, there's a tiered tax policy where if you reinvest the money in Chile, you get taxed less than if you try to take it out of Chile. Now you'll get even more taxed if you try to take it out of Chile. So there's a big project called El Abra Sulfides expansion that Freeport wants to do. And I look to that one to see when they trigger that, if they're okay with the current tax structure in that. So that impacts most of the industry, but the nationalization of lithium is another thing that's happening. And so the two producers of Salar de Atacama, which is the big lithium reserves in Chile, have leases. So one of theirs expires in 2030, the other one expires Albemarle in 2040. And so when those come off, then they have to do a joint venture with a state-owned company. And so that is probably going to hurt foreign direct investment and development for projects in Chile because you automatically lose half. In Mexico, they have nationalized lithium, but they're a smaller player in lithium. But their problem is, permitting, not permitting, but getting actual concessions to explore is going to take a lot longer. And they've included this auction system where you explore, you find something, then you say what you want, and then that property actually goes up for auction. So it's hard to believe that anybody who's doing grassroots exploration in Mexico, will get funded to do it anymore because, in 3 years, that same property will be up for auction, and then you might lose it. So, secured and tenure doesn't exist. So there's a lot going on in Mexico right now. We'll have an election next year. There's a lot of uncertainty with respect to the mining reform. There's a lot of people taking the government to court and winning. So right now, Mexico is a place, I think, where a lot of exploration especially is sort of staying away. The people there are probably okay, but the people not there, they're not going to be going into there, and people that are there are not going to be expanding exploration there.
Are there any other countries, jurisdictions where you're looking for future changes of a similar nature or possibly different, just places you're keeping an eye on?
Well, as the economies and people go into recession and, GDP growth flattens or goes down, people would look at the industries that make the most money, especially export revenues, and then look to tax them more or look at creeping nationalism. And so that would be my worry. And the more it happens and is documented and sets a precedent, then other countries don't look at life in a bubble. They'll look to see, this should be okay because Chile's nationalizing lithium. I can do it too, or something like that. Or look at their tax policy. I can do that. Like for, I think Sol Gold is trying to permit their project, their Cascabel copper gold porphyry in Ecuador. So they're doing a deal with the Ecuadorian government on a tiered royalty. So their royalty could be from anywhere from 3 to 10%. And right now at current prices, I think for copper and gold, it's around 8%. So that's not a small royalty to put on that project, but you will get it permitted. And so some people want the royalties, some countries, some people will want a bigger stake in the project, like that's what's happening in Mali. They want to increase their overall stake up to 30%. And other people want you to do a joint venture with a state-owned company like what they're suggesting in Chile right now. So everyone's got a different way of trying to get more of the pie. The problem is that most of the foreign direct investment comes from the big companies, and the government's not usually there to help with the capital injection.
Can you think of, we're talking about all these countries that are doing interesting things that may dissuade companies from coming in. Can you think of a country that's doing a good job where you see a good balance between the country is getting some benefit, but they're also welcoming to companies?
I would say overall, I think, Canada's doing what it can with respect to introducing tax credits on companies that build processing capacity in Canada. They're introducing a new critical mineral flow-through program and that. So I think Canada's good there, but the problem is we don't have enough infrastructure to access these minerals. And that's going to take a while to do, and who's going to pay for that? Do we have the tax base for that? And that's the problem there. What I do like is Brazil because, the infrastructure is a little bit better in some of the regions, but also they have, Canada's also blessed with a lot of hydropower and stuff like that. They are super blessed with hydropower and green energy in Brazil. So people can flaunt their green energy projects or mines there. But also, permitting there and the tax policy there is really incentivizes mining. And so, in terms of mining and growth and, a country that really likes it and does well with it would be Brazil. And I'm going to a conference there in August, and that's basically going to be talking about critical minerals. But what we're also seeing is that all these critical mineral countries want what everybody else wants. They want more downstream. They don't just want to produce the intermediate product. They want the battery infrastructure, whether it's African Congo, copper belt, or Chile or Brazil. And now BYD, which is a big Chinese electric vehicle manufacturer, they're now investing in downstream technology and manufacturing in Chile and in Brazil to make sure that they can secure the lithium in both places.
Wow, and that probably makes a lot of sense.
Yeah, I think they're being forced to do that because now that everybody's looking for these critical minerals, to add another, incentive to say, hey, I will invest and I'll do it quickly, whereas you might wait longer for years or U.S. or somebody else to do it.
Okay, so we've been talking a lot about, impending demand for all these different metals, right? And I am interested to hear your take on a topic that I've been hearing a little bit more about lately, which is this deep sea mining seems to be coming up. So in your opinion, is that a viable way to increase production, or does it not make sense economically?
Okay, well, what deep sea mining, a lot of these advocates, the mining advocates would say that, in terms of their impact is much less than surface mining, but it's not, because we don't even know what we're impacting down there. And if you look at the impact on the ocean, it's much bigger than the surface impact of mining on land. So I don't buy that in terms of the impact. But also, I mean, these are very high-grade nodules, and so geologically they're called, volcanic hosted or volcanogenic massive sulfide deposits. We mine those on land, which are older, obviously, and now petrified. These ones are just being formed on the ocean floor, and those are very high grade. They've got base metals, lead, zinc, and sometimes precious. Basically you just lop off the nodules and then bring them up to the surface. The idea in the first bit was be able to process them on another ship. But, now what you're dealing with is that you are basically with a boat that's got, basically direct shipping ore, and then you got to send it somewhere. And so you need another boat to help you do that. But the power required to, bring this stuff from a couple of kilometers down onto a boat, then ship it out. It's like, even though we might talk about the environmental impacts, it's really the economics that will probably prevent a lot of people from actually doing it, because it's probably not viable. The economics just won't work. I know that right now on the territories, like that's not in anybody's 200-mile limit, there is what is it called, the International Seabed Agency or something like that, that's meeting in Jamaica, that's talking about putting a moratorium on seabed mining, which will impact some companies right now that are mining that. But I know that, like, Norway, a country that's supposedly very green friendly, but has, a big oil and gas sector, has issued licenses for people to mine undersea, seabeds off the coast of Norway. So they control that territory. So whatever happens with the ISA doesn't impact them. But for me personally, I think the economics will dictate more so than the ESG impact, that this is just not viable.
Okay, that's an interesting one for sure. Thanks for going into that. So we've been through quite a few different topics here, and I wonder, as we wrap up, if we can try to tie it up into something to leave investors with, maybe your advice as we're heading into the rest of the year.
Well, right now, I mean, the big problem is, there is a negative sentiment on commodities, but, probably more so equities. Like, if you look at precious metals, gold hasn't done that badly. Year to date, I think it's up 8 to 10%, but equities haven't done as well, especially the non-cash flowing equities. The cash flowing equities have had issues with inflation, margin compression, and recently Newmont had a 17% drop in their Q2 production, I believe, because of a strike at Penasquito and other issues with some other operations. And so, people are worried about gold equities and then leverage to gold, because, when gold is not up because there's lots of ETF buying, it's more so central banks buy, and so the sentiment is not positive on equities, and that hits the explorers and that they can't raise money. But there are opportunities there where people have access to capital. If you like companies and you think they got a really good project, this is an opportunity to start slowly building up a position in those. Critical minerals, I do see overvaluations, like in the lithium sector. So if you do like that, you probably want to hold back a bit if you're just entering. But other ones like copper and that, there's still a lot of good opportunities, because China's slow rebound from their COVID policies of last year has yet to take much of a lift. And so we're not seeing the kind of growth that we expected. And so there's still a lot of inventories out there and keeping prices at bay right now.
Okay, well, good to hear that amidst all of these things, there are opportunities out there for people who can find them. So thank you for coming to talk. It was really great to catch up with you.
Great. Thank you very much.
Of course. And once again, I'm Charlotte McLeod with investingnews.com. This is Joe Mazumdar with Exploration Insights. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.